Hi and welcome to the Market Alert for Monday, the 6th of November 2023. So according to the news, best week of the year so far as we get towards the end of the year, which seems slightly odd, but there you go, just a squeeze or a real new bull market. Well, only time will tell. It is Santa rally season. That's already kicked off by the looks of things, given Friday's move. Yield and dollar tumble to soft US jobs reports, sending stocks higher. And speaking of jobs reports, jobs, that's the non-farm payroll numbers, come crashing down. October payrolls miss estimates, rise only 150k as employed workers plummet by 348k. And on a different note, metals, an interesting article here that central banks on course for colossal year of gold buying. So no surprise there at all. That's been going on since 2010, actually, the accumulation of gold by central banks. But over the last couple of years, no doubt the escalating wars are adding to this. But certainly, according, like I say, to this article, massive buying by the central banks. And of course, you just use the derivatives to smack the price down. You buy the spot price a lot cheaper by using the derivatives, and that's what we're seeing. And again, as I've mentioned before, why silver continues to be under pressure thanks to the gambling instruments being able to force the price down. Economic news for this week. Today we've got construction PMI, and then we've got FOMC, Waller speaking. It seems to be central bankers for the rest of the week, to be honest with you. Instead of looking at each individual day, we just look at broadly. We can see that there are central bankers out for most of the week, but we'll look at those in more detail as the days pass. But now let's have a look at the markets from Friday, their reaction to the non-farm payrolls, and we'll kick off with the Dow. So in the Dow, the market trading up to 34,146 or within that region, and you can see what happened when we got there last time. The markets moved lower. However, as we go into November and December, we can expect the markets to try and attempt to move higher, obviously for the bankers' bonuses as we go into the end of year rally. In the 30-minute chart, you can see the market's reaction to the non-farm payroll numbers there, continuing to move up. And overnight, the markets are just below the close there, need to get back above the high. If they do this, this will take out the 34,146 level in the daily chart there. So in the German DAX, not such a big move during Friday, but up on the overnight and it's been up for the last few days. We are becoming overbought, so we may get the odd day where we get a bit of a pullback. The 50 EMA is also giving the market a bit of grief there, but it's still above the 5-bar moving average at the moment. In the 30-minute chart, again, you can see that we were on the way down until we had the non-farm payroll numbers. That said, the market came back at over 50% of this, but overnight the market is around about Friday's close, needs to get above the DP, and I suspect there won't be much trouble in moving this back to the highs during today's trading session. In the S&P 500, not too dissimilar from the Dow, trading back up to the recent high to the left there, which you can see. 30-minute chart, again, the market's reaction to the non-farm payrolls is where the move came from during Friday's session, and also the market holding at the 20-bar moving average as well. In the FT100, similar picture, actually not a similar picture, the market actually down on Friday. Pressures in the UK obviously affecting the UK market, not moving too high following the NFP numbers. In fact, we saw a decline, which is most unusual, and the market trading down towards the low overnight as well. So in the US dollar, this down sharply on Friday, obviously due in part to the fact of those soft numbers from the NFP numbers, meaning that interest rate rises are currently off the table, which is bad news for the dollar, but the metals being supported by this. And in silver, you can see this moving up during Friday. It makes a change, and if we look at the 30-minute chart, you can see how they struggled to hold this on the highs. It was very choppy over several hours for the price of silver. You can see the volume there as well. Again, the market reacting to the weakness in the dollar. At the moment, we're above the DP, but it's starting to look weakish overnight there. In the gold market, also sideways to higher as well in the daily chart, a lot stronger than silver at the moment. But you can see again the market's reaction to the NFP numbers there as well during Friday. At the moment, we're sitting at the 200 MA for this market. The low is just down below the 1950 level there. Again, just hammer the market down, keep it below the $2,000 an ounce so that they can continue to buy. And when I say they, I mean the central banks and those who are hedging against what's going on around in the world at the moment. Let's have a quick look at the gold-silver ratio before we finish. And in the gold-silver ratio, you can see there we're down sharply on Friday, obviously because gold was hammered to the downside more than silver, as we saw it was sideways for several hours trying to hold and in a trading range. So let's see what happens during today as we kick off the week. Monday, see if prices can manage to follow through on Friday's NFP numbers and continue to the upside. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.